so we can make better assumptions to project what the future stock price will be in the next 1 year, 3 years, 5 years, and even 10 years. I'm gonna help show you how to streamline looking through a financial statement. Just because it's over 100 pages doesn't mean that it needs to take a ton of time. And once you get the gist of what you're doing, you can repeat it over and over and over. And that's how you're going to protect your wealth. Welcome to episode 23 of the Visionary Investor Podcast. Today I'm going to talk a little bit more about fundamental analysis. So after you've gone through your stock screener, you've found some companies that you're interested in, and now you want to compare them to other industry leaders, you're going to want to perform a strong fundamental analysis in order to understand if the companies that you're planning to invest into are fundamentally sound. And a great way you can do that is by looking through a company's financial statements. In particular, I'm going to break down a few different key areas that I like to look at, a little bit different than others may share. The first thing you want to understand really well are what are the core operations of the business. So for instance, are they selling products? Are they selling services? Are they selling a combination of both? But at the end of the day, what is specifically driving the company forward? What are their core business operations? And knowing that, you can take a look further into the trends of what's been going on with the revenue growth and operating expenses related specifically to that segment. If they're selling products, what is the supplier vendor concentration? Do we see high concentrations, or are they spread out to prevent risk? And are we noticing that the company is making efforts to grow its core line of business, or are we noticing that they're focusing a lot of their time, effort, and resources on other lines of business or ancillary products? This could be a sign that they're trying to grow for the future, or it could be a sign that their core operations are having trouble. And of course, it's important for a company to pivot when necessary, but you also want to make sure that those core operations are able to sustain impacts, especially if we have a recession or if there's another company that takes over the market. How will the company you're investing into be able to handle this? Are they going to be able to pivot properly into a new way of doing business to properly compete? Or are we going to notice that they are significantly struggling and that's causing them to lose market share? What we'll notice here is obviously that's going to have a significant impact on their stock price long term and their ability to remain a leader. By understanding how management is trying to drive the business forward, what measures they're taking to be visionary, you can get a better understanding of the direction the company is going. Because if we take a deeper dive into a company and we notice that their core business is doing very well and they're also trying to break into this new market, looking through the company's financial statements further, you can better assess whether this is a good decision or maybe this is actually a negative decision. And if you're confused, take a management analysis. Put this information into ChatGPT and see what the tone is. What is going on here? Is this positive or negative for the company overall? Many people often skip over the risks of a business in a financial statement, but that can actually tell you a lot. Is a company preparing for a projected recession? Is the company not even aware that we may go into a recession? How have they handled recessions in the past? Looking at the core business and seeing how it's grown over time is very important and impactful for when you're investing. I'm not going to go too much into it in this episode, but we're going to want to look at the financial statements further and see what's going on with the numbers. We're going to look at the balance sheet. We're going to look at the income statement. We're going to look at the cash flow statement. And by doing this, we're going to get a better understanding of the financial health of the company before investing into it. And I'm going to teach you exactly how to do that. And if you want more guidance and help to do this yourself on companies that you're passionate about, send me a message or click on the link below to apply for the Protect Your Wealth program. There, we'll walk you through step by step exactly how to analyze any company so that you can take that and do it 6 months from now, 1 year, or 5 years from now in order to protect your wealth, to create generational legacies, and truly change your life. The more financial statements you look through, and even with the help of ChatGPT or another AI tool, this will allow you to get a better understanding of what's going on in the actual industry. If we compare, for instance, Costco to Walmart and BJ's, we can see a difference in the companies and how they're run. And by looking at those details and then zooming out and looking at the broader picture of things, you'll start to notice some key trends and patterns, and you'll start to be able to see where management may be having some shortfalls and the business may not be performing as well as you'd expect in certain areas. When you find this information, because you will see discrepancies between competitors, dive into that. Of course, there's going to be differences in the size of the businesses. There's going to be differences in some type of operations, in the amount of facilities or warehouses maybe they have. But take the information and find percentages so you can compare more apples to apples. So for instance, if we're looking at a company that's 5 times larger than the other company, do we notice that this has significantly impacted its profit margins or its EBITDA margins? And if so, is this because management is having trouble as the company has scaled? And do we think the smaller company is going to also have trouble, or are they showing signs of financial strength as they're growing over time? You're going to want to understand what's going on with the operations, how profitable they are compared to the other companies in that industry. Aside from the growth of the company year over year, you're going to want to understand how leveraged the company is. How much debt to equity do they have? You're going to want to look through the cash flow statement. Understanding the movement of cash is so incredibly important because at the end of the day, it's showing you what's really going on behind the scenes, and it's telling you how well management is handling that money. So you're going to take this information and you're going to have a better understanding of, all right, this is why we see that cash flow balances are X in year 1, Y in year 2, and Z in year 3. Is this aligning with the business? Are they actually reinvesting a lot of money into the business, or is the company using a lot of debt to fund different operations and investments, but not actually producing profits at the end of the day? Financial statements and finance in general may seem incredibly daunting for you, but I'm here to help make that easier because I've noticed there are so many key patterns and trends, and if we take away all the difficult language and jargon, it all comes down to what's going on. How well is the company operating? How well are they turning over their inventory, if that's their line of business? How efficient are they? What's their ROA? What's their ROE? Return on assets, return on equity? Are we noticing positive growth year over year in the company, in top line revenue, in bottom line net income, in net profit margins? Are we noticing the company is growing its asset base? Are they growing their cash? Are they reinvesting their money back into their business? And how that may be impacting the business. When we take a look at things both at a detailed perspective and take a step back and look at it from a more broad perspective, we really get a full picture of how that company that you may invest into has been doing, so we can make better assumptions to project what the future stock price will be in the next 1 year, 3 years, 5 years, and even 10 years. You couple the information you learn from a financial statement with other qualitative analysis you do, notice you have such a complete picture of what's really going on. This is how you can truly find visionary companies, because when you do this full analysis and you complete your due diligence, you're going to notice a lot of patterns, a lot of information, a lot that's not shared generally in the press, in analyst recommendations, and different investment reports, because they have to really sum things up into a short 1-page, 2-page report. You're now going to have so much more information at your fingertips. I'm going to help show you how to streamline looking through a financial statement. Just because it's over 100 pages doesn't mean that it needs to take a ton of time. And once you get the gist of what you're doing, you can repeat it over and over and over. And that's how you're going to protect your wealth. Thank you so much for listening. Please make sure to like, rate, and subscribe to the podcast, and continue listening everywhere you get your podcasts. Have a great day.